Hey, it's Andreas. I've been investing for over 10 years, and in today's video, let's take a look at the stocks that I have in my portfolio. This is the growth portfolio, the main one. It stands tall at about 450,000 American dollars, up 60,000 American dollars this year. Quite happy with the performance. The plan for today was to talk about what do you do when your portfolio is down? How do you think to give you a bit of comfort in a tariff environment? But just like a lot of your portfolios, mine has fully recovered, and it recovered too quickly for me to be able to manage to make a video when it was down here. But before we go into the holdings and take a look at the changes in the portfolio and what's going on, I just want to reiterate that this portfolio is an extremely high risk portfolio. It's right for me as a young man who's comfortable with a lot of risk, all right? And if you feel uncomfortable when the stock market is dipping a lot, look at screen right now, you can see down 11%. And as you can see, for up this year, up roughly 60,000 American dollars. This means roughly down 50,000 American dollars or something like this. And then up here, 23%. That's a lot, getting close to 100K up there. Definitely here when we were up before the whole Trump tariff thing, up 28%. Definitely 100K plus in increases, and then all of a sudden down, are you comfortable with that? And if we zoom out, remember, extremely risky portfolio, very, very risky portfolio. I just want to reiterate this, all right? We will see a company that went bankrupt in the holdings as well. You can see big spikes, and you can see big dips. Right, this is over 3 years. But compare this to the S&P 500, who's up 36% in 3 years. My portfolio is up 253%, up roughly here 320,000 American dollars in 3 years. So that's, a majority of the portfolio. It's a lot more than I put in. Right? This is the power of compounding. You can do this too, all right? In the beginning, I saved maybe $20 in 1 month. 40. A lot of the time, early career, I would put aside $200 a month. But investing is not linear. It's exponential, like you can see in the graph. And all of a sudden, the snowball is too big to ignore. For example, here, if we go back to 1 year, the average salary in Sweden is 300,000 for a full year. 60K in America, that's quite good as well. So I try not to look too much at this portfolio because it can be demotivating. I try to pretend like it doesn't exist. I'm still doing a 9 to 5. I'm only 30 years old. And I don't make a lot of changes. Although now we have made some changes. Porch Group here. These are my holdings, by the way. We can see more than 50% of the portfolio bought at just above $1 a share. And the return 450%. Very, very high conviction pick. In total, I made a bigger bet on this than some of the other ones here. But for example, Palantir and StoneCo and Bausch & Health, these were roughly the same size before. And now I've even sold the initial investment that I made into Palantir, because I was going to use that capital at a different opportunity. I had some difficulty moving the money out of Sweden, and I had to use another one of my portfolios in that endeavor. So those monies were reinvested, and just to make the video nice and short, I will talk a bit about the 3 stocks that I recently invested in. and some about the other larger holdings as well. Porch Group, I cover them like a hawk. I make a lot of videos. Home insurance premiums are sticky, they are increasing. We're seeing that profitability now. Fantastic job. A lot of risk is off the table as well with the new reciprocal exchange, and I'm extremely happy with this stock. It's like a beautiful flower. I keep watering it, it keeps growing. I don't need to do anything. Palantir, extremely happy with it as well. Back when I invested, you could see other channels like Everything Money saying that this stock is only worth $5 and it's gonna go lower and people would hate on it. But at the time that I started to make this bet, I worked at Dell Technologies and I was able to understand data lakes, the structure of companies, the way that the IT systems communicated, and I could understand that the fit that Palantir has is one that's going to make a lot of money in the future. So just using my professional experience here and buying a stock that I could understand was enough. Then StoneCo, still waiting on this. They are doing very well, although macro is bad in Brazil. There's a lot of instability. I make a video here from time to time. They keep growing revenue, they keep growing profitability, but share price does not increase. And I expect that to continue, but I expect that eventually, like all good Latin American companies, they will start paying oversized dividends, and that's the way to get money out of that country as an investor. We see Alphabet here coming up at 2.5% of the portfolio. This was all the shares that I managed to vest from the time when I worked 1 year and 8 months at Google. So that's why I don't look too much at this portfolio. It can be demotivating. You work, you get the salary, you get stocks vested, and you just see that it's a drop in the ocean and it doesn't really make all that big of a difference. But obviously now we're making a YouTube video for you to find inspiration on stocks to buy, and also hopefully for you to think about the strategy that you're doing with your investments. So push the like button for that. I'm getting temptations here just looking at the stock portfolio. Bauch & Health, this one is at risk of being cut, by the way. Not too happy. Cut the weeds, water the flowers. I will watch the next earnings call as well, but the main problem here is too much debt. If you look at market cap and you look at enterprise value, you can see just how massive the debt is. Big problem. Perhaps this one will be cut. I will watch closely next earnings call, and maybe it's bye-bye for this. Vitrolife, still happy. Reddit, gotta stop quick on this one. Some of the Palantir money went into Reddit. Very happy. I see big growth. They have undeveloped ad units. They are impression driven in revenue growth from the advertising sector. And they have some other sectors like data licensing and consumer trend insights that also can drive revenue. But CEO not doing too good in communication, not doing too good in being a figurehead like Karp or Elon Musk. Say what you want about him. Right, this is a property company in Sweden, SBB. Very risky. If I scroll all the way down, we can see another property companies here that went bankrupt. And remember, extremely risky portfolio. Some companies will go bankrupt and some companies will be massive winners. And the winners will carry the portfolio. But this is always a risk. Bankruptcy. I'm aware of that. And I take massive risk in the portfolio. But remember the returns. Higher expected returns, higher volatility. And if you have a proper strategy, you make the bets a proper size, well, then a winner is going to make all the difference. But on the flip side, expect some of your bets to fail. Here is a failed one. SBB, they're doing good for now. They can be a massive winner, but very, very risky. MPW, I like this stock. Then it dropped to $3 something. I bought it here at $5.80 in this portfolio. And when it dropped to $3, do you think I sold? Definitely not. When I started a new portfolio, the dividend portfolio that I try to take to $100,000 as quickly as I can, I do a bit of a challenge regarding that here on YouTube. Then I just loaded up on MPW, just bought massively with regards to this stock. And that one has carried the dividend portfolio quite a lot. They're just on the cusp of being fully recovered now. Some court drama still lingering on. I see some people saying that it should trade at 11 something dollars because that's the fair value with regards to their assets, but it's never gonna trade just close to the asset value. There's always going to be a premium, and I think that those videos are a bit unrealistic. Just my opinion. I think that this stock is more likely to trade around $9 something. I don't think it will break $10, and it will stay below that because they will pay out profit in terms of dividends. SoFi reinvested some of the Palantir money into that one. Very happy with performance, strong earnings. They've started the crypto service now once again. They did this before, but they had to stop when they became, a real bank. But now they're back on it, and you can make a lot of money from being the platform that allows crypto trading. It's not regulated like stocks are. They are not even looking into rug pulls anymore from the finance department, in this case from the SEC, Securities and Exchange Commissions. They are just tokens for collecting value or something like this. So no criminal investigations there into any tokens. And you can just charge whatever fees you want because it's unregulated. Sure, competition between players, but it's a gold mine. And I'm sure SoFi will have amazing earnings from that going forward. Alright, let's not drag on the video too much. Orion Properties bought 1,000 shares here. I have over 4,000 in the dividend portfolio as well. In this case, they dropped a lot on earnings, so I rebalanced some of the Palantir money into this one. It recovered very, very quickly, 20% in extremely short time. This is not the norm when it comes to dividend stocks. This is absolutely massive moves when you compare to the average move of this type of stock. However, unfounded, we see that some big leases are being signed in America in the office sector. We've seen some big leases being signed in Stockholm. I've seen it in Ireland, and the market seems to be turning around in this case. But this is also a small player, massive risk, extremely cheap. Basically, it's trading like it was a bag of manure that no one wants. And I decided to pick some up for cheap. If we continue to scroll down a bit. No, I don't see any other company that I need to comment on in this video. Hopefully this made a lot of sense. You can see this massive concentration here with over 75% of the portfolio being in only 2 stocks, and this is even after me selling the initial investment here in Palantir and rebalancing it. From the beginning, this bet was roughly as big as StoneCo and Bausch & Health, but when you get a winner, well, winners win and they just run off like a fast racehorse, and you can't really catch them, and it snowballs out of control. Well, I will for sure make sure to rebalance this portfolio before I finally decide to retire, because remember here from the graph where we could see on the year these massive swings, especially here in March, right before the Trump tariffs. If I had retired then and moved to Southeast Asia, planning to do Muay Thai every day and live on the beach, and all of a sudden everything drops. This is not only the growth portfolio dropping, by the way. These are my index fund, the pension, savings, investments. This is the dividend portfolio as well. Everything just dropping. Well, then I would have run out of money before I would have died, most likely. And that's not a good situation to be in. In fact, it's an extremely unlucky situation. If you want to calculate, if you have enough money, you can do the Monte Carlo simulation. It's based on probability. You use 3 standard deviations of never running out of money, so 95% probability. The unlucky, the bad scenario, is the sequence of risk scenario, when just as you retire, all the asset prices just go down the drain. They drop lower, 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 and you have to sell those assets to live off on a lower price. And when the market eventually recovers, well, you sold a lot of shares and you're not gonna be partaking in that recovery as bigly as you would have otherwise. And as you draw down on the principal, if you spend the same amount that you budgeted for, let's say you plan to spend 60,000 a year, something like that, and you continue to draw down like that, even though you have unlucky sequential return on your assets, well, then you're gonna run out of money. And this would have been one of those scenarios. So it was quite interesting to watch. I was in Thailand watching here, seeing, all right, I was ready to retire, everything fine, and then all of a sudden these tariffs come and I see, wow, lucky I didn't pull the trigger on that one. I just wanted to highlight that and then bring it back to the portfolio with a massive concentration. So this portfolio is right for me for building wealth quickly, taking huge risk. Once again, huge risk. This has allowed me to build wealth very quickly. And where I want to go with this is that this is right for a 30-year-old man who has a lot of ice in his stomach, who's able to sit through huge ups and downs. And when you build your portfolio, you need to ask yourself, would I be comfortable here with these massive dips? Or would this be something that I would not be comfortable with? Now I just pressed something here, so we're gonna see how this turns out in the video. But I want you to think about that. Think about your own level of risk tolerance, and then you can build a portfolio that matches that. Hopefully you can find some inspiration from some of the picks in my portfolio. Look into them, do your own due diligence, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.